there, I'm Allison Freeman, a realtor with the Premier Property Group here on 30A. And today I'm going to be answering some burning questions, busting myths, and separating fact from fiction. And to help me do just that is someone that I often work with putting real estate deals together, Mitch Payne. Hi, Mitch.
Hey, Allison, how are you? Good to be here.
Okay, so let's get right to it. Something I'm often hearing from clients is that interest rates are too high and I'm just gonna wait until rates come down before I purchase. So fact or fiction, should buyers wait until rates come down to buy on 30A?
That's a little bit of both. I mean, the fact is the rates are up. The fiction is that they can't renegotiate the price of the house, but they can renegotiate the interest rate. Most clients right now that are buying on 30A are investors because the prices of houses have come down. And investors are educated enough to know that when rates do go down, they can, refinance at any time during a good rate cycle.
So Mitch, I have clients who want to purchase an investment property here and use it as a short-term rental, but they feel like they may not be able to get approved for a loan based on their income, even though they have a lot of cash on hand. Is it a myth that buyers can only qualify for investment property loans based on income?
Actually, that is a myth, but most investors right now are going with a DSCR loan. Briefly, what a DSCR loan is that the client that has a ton of cash but does not report a lot of income. What they do is we do an appraisal on the property, we assess the value of the property and the short-term rental on the property. What those projected incomes and actual incomes are, that's what we use for the income on the property. Typically, Allison, the rates are close to normal rates that are offered in the market. Also, the down payment requirements start anywhere between 20 to 30%, but we like to go off about a 25% down payment to start with, and then work our ratios in from there. So to answer your question, it is a fiction that they cannot buy a home, and it's a fact that we've helped many people obtain their investment goals.
I love to share a good success story. Can you share with us a success story from 30A where a DSCR loan played a pivotal role in someone being able to purchase a property here?
Absolutely. We had a client that was looking at a full document loan. The full document loan allowed them to purchase about a $1.5 to about a $1.8 million property with not so good, returns. It was okay. They were still doing well on their Schedule E. But I introduced them to the DSCR loan. They were able to purchase a $3.2 million property, obviously a lot more investment, but it allowed them to actually have positive cash flow on their Schedule E at the end of the day. It was a very rare unicorn, but it was a huge success story. It's, from my knowledge, ever since we've closed the loan, it's been booked every single weekend, and they're enjoying their property themselves. They've come down and stayed in it as well. But they actually are doing smokingly right behind Shunk Gully.
So Mitch, you mentioned the Schedule E. Can you explain kind of what that is and why it's important for a buyer who is going to purchase a short-term rental here?
Absolutely, because the information that they're typically given from a buyer or selling agent is what's called a gross revenue that they're going to collect from the property. What happens is if you actually lay that same income projection onto a Schedule E, which is right on the IRS website, I can prepare one for the client that would like to look at it, and they get to see exactly what they get to write off. Most clients don't know they get to write off the HOA expense, the insurance, the utilities. That big number, though, that they get to enjoy is that interest paid to the bank. Also, there's depreciation on most properties depending upon your income level, but at the end of the day, they can actually see the cost of ownership. And I think you and I recently did one from one of your homes. Cost of ownership for that property was only $700 a month, if I'm accurate. So the Schedule E is the real conversation to be had to determine how it affects you in a positive or negative manner at the end of the tax season on your investment.
Well, Mitch, it's been great to debunk some myths and help people see the real opportunities that lie within the 30A real estate market.
Well, thank you for having me on. I appreciate the time.
Absolutely. And remember, whether you're a first-time homebuyer or you're looking to expand your portfolio here on 30A, we are here to guide you every step of the way. So keep dreaming about your 30A property, and bye for now.